Good day. My name is Andrew Schaefer, and I'm going to review with you the monthly management reporting provided to homeowners associations and body corporates which Trafalgar manages. The monthly management reports are generally circulated after the 10th working day of each month for the prior month. These are critical reports outlining all the financial management information relevant to the building as at the prior month end. Having a look at the screen is a typical first page of a management pack, and I'll work through the relevant details with you in an effort to make sure that the reports are fully understood and well utilized on a monthly basis. Typically, the chairman, financial trustees or directors, and any other interested trustees and directors would receive the management reports and hopefully work through these on a monthly basis to make sure that they are happy with the information, that it's correct, that they're aware of all the financial and other parameters, and have an opportunity to raise any queries as these may be identified. The covering page, as seen on the screen, gives an index of the different reports included in the management pack. Over here we can see this report is sent on the 18th of June, and it pertains to the financial reports for the month of May, which are then finalized as at the end of May 2019. The different components in the report are listed in the covering letter with a short description of the contents of each particular report. Moving then to the next page, this is an index which allows cross-referencing of each report component to the page number in the pack. On page 3, there's a one-page financial summary report which gives what we consider the executive summary of the management information. It gives the balances of the administration funds held, cash on hand in the trust account, as well as in any investment accounts. And for bodies corporate, it will give the reserve fund balance as per the financials and the bank account balance of the reserve funds. These two would pertain to sectional title schemes only. Following that are expense items or income items with material budget variances, and a listing of these variance items is then given below. Emphasis is then given on the municipal recoveries for electricity and water, hoping to optimize recoveries over 90% to ensure there's no levy leakage. And then finally, the top levy debtors are listed in descending order, and this allows the quantum of levy debtors, which is totaled there, and the breakdown to be shown, so this can be carefully monitored. So a useful executive summary shown up front in the management report. Moving on to the next page then. This report is a surplus report or a disbursement report, and it's really the bank statement for the building in Trafalgar's trust account environment. It's important to check the timing parameters. So here we can see it's the trust account statement for the month of May 2019 for the building Moncrief Body Corporate, for which I'm the executive managing agent. The closing balance in the trust account is shown there, 96,000 rounded. The levy income, which is levies actually paid and receipted, is shown, 175,000 rounded. And below that, movements into and out of the account, both expenses of income with descriptions of each particular line item. All creditors paid through the creditor system are aggregated over here, 231,000, and there's a following report which is titled the Creditors Role, which will give a breakdown of each individual creditor item paid and the related details. And the closing balance, the cash balance in the trust account for this building as at the end of May, is 108,748 Rand 98 cents. So a very important report approximating a bank statement for this particular building for the month of May, with important financial parameters and the closing balance as at the end of May. This report also suffices as an invoice for the management fee, and one can see the management fee itemized there with the VAT and the tax invoice number there, making this a SARS compliant tax invoice for Trafalgar's management fee. Also important to emphasize the contact details top right. So any queries arising, there's the contact details for the portfolio manager, account administrator, escalations available to the maintenance and divisional managers, and also contact details there for the branch concerned. So important to review this report with the pack and to understand the components of information contained. Moving on, we move on to the income statement and variance report. This is presented in a multi-month format where each month of the current financial year is mapped out individually. This allows gaps and trends to be spotted. There's also the actual year to date compared to the budget with variances shown, and it's important with this report to make sure that the variances are noted and understood, and thereby they can be managed, to look for any gaps in terms of income or payments, and to make sure, as far as possible, that the building is performing in line with budgetary expectations. Typically, I would look at the overall income related to the budget, and here we can see there's a positive variance, which is favorable, and that would set one at ease. And particularly here, we've got interest income, which was not budgeted, which is a significant reason for the favorable variance, and most of the other items, except for rental income, are in line with budget expectations. Similarly, for the expenses, I'd be looking for how the total expenses compare to budget. Here we've again got a favorable variance with the savings, and again, that is a favorable position to be in. The report allows one to identify the variances. Here we've got a favorable variance in terms of municipal charges, particularly because our domestic effluent and water costs are well below budget. And I can see that there are costs that are paid and allocated each and every month. And the significant water savings here is also linked to the domestic effluent and explains the favorable variance. Maintenance is well above budget by 134,000, and we can see exactly which items are above budget, and this needs to be understood as correct, and certainly I would be able to confirm these because there's a significant maintenance program underway in terms of painting corridors and the like across the building. Security slightly below budget. Again, we're looking for gaps. So here we can see two gaps, which are largely based to a double payment here, which would then have, potentially covered the month prior. It would be important to get a statement from the supplier to make sure that we are up to date with payments. Salary should typically be in line with budget. Here we've got a 47,000 overspend or negative variance, and we can see it's largely due to casual wages over there. That's an additional painter that's working on a maintenance program at the building, and we also have a 25,000 Rand overspend on salaries, which is important then to understand, and this actually is due to the bonuses paid in December, which do not appear to have been budgeted, but that is correct, and it does explain the variance which is shown there. The administration fees slightly below budget with a favorable variance, and again the areas where savings have been made in terms of loan interest. The loan is now settled, so that interest now is extinguished, explaining the variance, and legal fees. There have also been savings there in terms of legal levy collections. Overall, the bottom line for the building, we have the net income over there compared to the budget, and we can see a favorable variance of 324,000, which is a positive position for the building to be in for the year. Any relevant notes are then given over here, notes 1 and 2, and that would cross-reference to notes that are included in the second column as shown in the screen. So the income statement, a really important report to track performance to budget, to identify variances, to make sure that the variances are noted, managed, and understood, and looking for any important trends and income and payment gaps which require management attention. Following the admin fund income statement and budget is the reserve fund. Once again, this would only apply to bodies corporate where a reserve fund levy and set of financials is maintained. And this is where you would see income and expenses related to the 10-year maintenance plan to preventative maintenance of the building being recorded. And similar principles apply in terms of checking expenses or income to budget, understanding and reviewing and addressing any variances which are necessary, and overall making sure that the reserve fund financials are understood, correct, and certainly noted. The balance sheet is the next report. This is presented as a summary balance sheet initially, and on the next page is a detailed balance sheet breakdown, which links into it, and is just a second level of detail. Perhaps we can look at just the detailed balance sheet because I think this is more informative. If we just have a look at the example here, it's important again just to check the building in question, Moncrief Body Corporate, the balance sheet as at the 31st of May 2019, and we can see the balance sheet general ledger items are reported as at the end of May, and a comparison to the end of the prior month of April given there, so any movements can be identified. The balance sheet has a typical format, which those in financial management or accounting would be familiar with, but important just to check the breakdown of assets. Here we've got some fixed assets, which are units owned by the body corporate. The operating receivables are levy arrears. This is a very important item to focus on and to see the trend of levy arrears. Here we can see 280,948 of arrear levies are owed to the body corporate. It's gone up slightly from the prior month, and the objective for the trustees, myself as the executive managing agent here, is to reduce this as far as possible and make sure that we've got effective mechanisms to collect these arrear levies. After that, we've got some deposits paid. This typically would be to the council for the municipal accounts and deposit on municipal services. Following this, in the cash and cash equivalents breakdown, we have the balances in the various bank accounts for the body corporate. Here we have the trust account balance, slightly gone up from the month before. We have an Investec investment account with a balance shown there, slightly reduced from the month before, actually because money was transferred into a reserve bank account with a balance of 100,000 Rand shown. And all body corporates require two investment accounts, one for admin surpluses, admin levy surpluses, and the second for the maintenance reserve. And altogether, the cash balances in the three accounts total 287,000, which has gone up slightly from the month before. So really important to have a look at the cash balances, where these are located, what the change in balances are, and to be aware of that financial parameter and situation. Moving on to the equity and liabilities, we can see the balances against all the different accounts over here with a breakdown. We can see the accumulated fund, which is the surpluses accumulated over prior years with the net income or loss of the current year. You can see the surplus over there, and the combined value shown 762,000. There are 19,815 Rand of creditors to be paid, which has come down from the month before. So very important to be aware here of creditor balances outstanding. The other item which is important to look at is the levies paid in advance. These are typically levies paid in advance of the first, and they totaled there, and that would then be funds belonging to unit owners. And we see a breakdown of any accruals and payments due to the receiver of revenue. So really important to take time to look at the balance sheet to understand the timing applicable to the different columns and information. And I particularly look at the arrears, the units in arrears, the cash balances in the different accounts, as well as the creditors that are due to be paid, and outstanding accounts to understand the creditor position. Any questions for any of the reports can be referred to either the portfolio manager or to the accountant, both of whose details should be provided to you. Moving on, this is the creditors role which I referred to earlier, and it gives a breakdown of the creditor payments which were reflected as a single line item on the surplus or the disbursement report. This is a fairly self-explanatory report which gives the creditor name, any balances brought forward, the invoice number for the invoice paid, the description and the GL allocation related to that creditor invoice and payment, the date of the payment and the amount over there. This is the date and amount of the invoice, and any balances carried forward. It's important to make sure that the invoices are paid in full. And there's the breakdown totaling the single line item creditor payment of 231,000 showed on the surplus report. The GL allocation summary of all the payments is given here, and it's very important to check that each of the costs are correctly allocated to the correct general ledger code, meaning that the transaction will compare correctly to the budget which has been loaded. So once again, important to see what has been paid, i.e. is it complete? Are these familiar and correct creditors and payments? Have the invoices been paid in full? And have all the invoices and payments been allocated correctly to the correct general ledger codes, and therefore will compare to the correct budget loaded. So that is the creditors role, and one can see now this is the creditors role for Moncrief for 31 May 2019. Following the creditors role, we have the levy role. In this report, each unit or each section is broken down. We can see the owner's name. The door number might be different to the section number as per the sectional plan, so that's why we have a column for the section number. The door number would be more familiar to the resident and to a caretaker or staff on site. The owner's name, the balance brought forward from the previous month's levy account, the charges raised. We see here there's an admin fund levy and a reserve fund levy because this is a body corporate. Any electricity charges would be reflected here. Water charges, adjustments on the account. We can see here there's an interest on an overdue balance with that amount over there. Payments made are shown here, the date of the payment and the amount that's receipted and the balance carried forward. So each page now reflects a breakdown of each and every section, each and every owner, charges raised, payments made, balances carried forward, and the trustees would like to see what those payments and outstanding balances are. There are some flags over here as well which categorize the different accounts into H is handed over for accounts handed over for legal collections. M is a property managed by Trafalgar on a rental basis. C is a property in clearance going through conveyancing and transfer. P has a payment plan. DO is a debit order. But each of these flags is summarized on the last page of the levy roll. This is a building with 89 sections, so hence there are a number of pages of the levy roll giving this information. But right at the end, you will see there's a useful summary of all the different relevant particulars. You can see a description and definition of the flags. There's a summary of the totals of the different charges that have been raised on the levy accounts. The adjustments are broken down over here, and we can see in the month of May, 175,350 odd rand was actually physically paid, and 186,000 rand has been carried forward in terms of outstanding levies. So that is the levy roll section. Following that now we have the arrears report. This once again is very important because it demonstrates the debt collector notepad for all of the arrear accounts and gives us an indication of what has happened, what follow-up is underway to try and collect the outstanding levies. The different accounts are sorted from highest to lowest, and the notes here are captured by the debt collectors. There are also some standard system notes with debt collection actions, and the trustees, directors, etc. are encouraged to work through this notepad to check each and every unit in arrears, what has happened with it, and are they comfortable the updates are current, that the debt collection is effective and on track. And obviously there's an opportunity to raise any queries with the portfolio manager. So if we just have a look at this particular unit here, it is section 36, door number 41. It's a unit in transfer because it's a clearance certificate's been issued. That would make me feel more comfortable because it suggests that there is a process underway to transfer this to a new owner. The arrear levies are typically collected through the transfer process. We can see the total outstanding is 55,000 rand and some extra. And we can see an urgent update has been requested from the transferring attorneys by the debt collector. And these are all the different notes that have been captured over time. So each and every arrear account listed in descending order with the flags pertaining to it. Here we can see some handed over accounts and the latest balance, total outstanding balance with the notepad. And we would expect to see an updated note each and every month, including from the attorneys, to make sure the debt collection is on track. But typically these arrear levies are critical to collect as soon as possible because they affect the cash flow and the financial liquidity position of the particular building. So in a nutshell, that is really the key financial reports. And the very last report included in the pack is what is called an 09 report. This is the payroll report. It gives the breakdown of all the body corporate employees, all of the different components of the payroll, which is processed by Trafalgar on behalf of the building, as well as importantly a leave balance as per the system. And one of the challenges for buildings is to make sure that leave taken is correctly notified to us to capture and maintain on the payroll system. So I would urge trustees and directors to check that all the correct employees are reflected here, that their salaries are correct and have been paid. You can see statutory deductions in terms of UIF, PAYE if they breach the threshold, total cost to company with a total there, which will reflect on the disbursement statement and the creditors role, leave due totaled up, and the leave per employee. So very important just to check that and make sure it looks correct and it's got the correct breakdown. In conclusion, that is the management report pack, reported monthly to all trustees and directors, normally after the 10th working day, and hopefully it gives a very detailed breakdown of all the relevant and important financial parameters of a building. And if this is closely managed, and in particular variances, recoveries, levy arrears are closely managed, a building should perform well and meet the expectations of both the trustees and directors as well as the residents for long-term success. Thank you very much indeed.